Hello, my name's Tim Gregory. I'm from Vermeer Investment Management in London, and I'm here to update you on some thoughts on global equities, which of late have had a great run. The S&P 500 has been making new all-time highs again, and stocks around the world have been shrugging off all their concerns and focusing on the possibility of a trade deal, further cuts in interest rates that we've seen from the Federal Reserve, possibly a resolution to the Brexit situation in the UK with a general election still to come in around a month's time. And so a lot going on, but a lot that's helped global equities to make very positive moves in the last couple of months. And nothing's helped more than the results season in the US, which has been generally pretty strong and seen a number of good responses from stocks that have helped drive markets to the level they're at. So what next? Because obviously now we're at pretty high levels. Bond yields, having made lows a couple of months ago, have been rising, and that's put a little bit of pressure on defensive stocks and seen something of a rotation in markets of late, which has helped the value area of the market, and sectors like banks have improved from very low levels, and one or two others like telecommunications stocks have also been performing well, helped by their yield requirements. And what we've been pondering is, given all this great news and the response we've had, with all the worries still there really lying in the background over whether actually a trade war will be signed, whether actually Brexit will be smoothly resolved, and what the situation is for US politics 12 months from now, whether we'll have a change in the presidential situation and what that'll all mean. So that creates a lot of uncertainty for us going forward after such a good run. So we're looking for areas that might be a new driver for the stock market to help equities continue to rise. And one thing that we've noted this week has been the suggestion of a massive buyout for Walgreen Alliance by one of the big private equity firms. Now, if this was the case, a deal that potentially could be worth as much as $70 billion would be groundbreaking for markets, in the sense of the scale of this deal is like something that we've never really seen before from a leveraged buyout potential situation. And what this might mean is that with potentially as much as $1 trillion of private equity money sitting on the sidelines looking to get active in the public market, it could be another driver for returns in the market going forward. And what makes this particularly interesting is that value parts of the market that have been struggling to find favour with investors could be the targets of a lot of these stocks, particularly if they have very good free cash flow yields. So this could be an interesting new dynamic which might help markets to push on again in 2020 as we move towards the election and all the uncertainty that might create. So this could be one area for investors to look for possible opportunities in the market which might lead to very strong returns if we see a lot of takeover activity next year, which is a distinct possibility. Thanks very much for your time.